So online, good morning. So we had started the rights issue. Then we were discussing about the number of the rights. Then we are now to see how to compute the value for the right. So I gave you some details in relation to that part on how to compute the number of the value for the right. So I suspect if you can check through your notes, the last sentence you are able to write was that the number of the rights normally have the value, and the value of the right will be expressed as follows. I suspect that is where we stopped. Yeah, so there are three ways on how we can be able to compute the value of the right. So one of the formula on how to get value of the right. One of the formula on how to compute value for the right, it will be equal to market price per share minus theoretical X right price. So one of the formula on how to compute the value for the right, you simply take market price per share, then we subtract the theoretical X right price. That will be one of the formula. You simply take market price per share, you subtract the theoretical X right price. Market price per share, we have seen how to compute it. So it is normally provided, but I have shown you how to get the theoretical X right price. The second formula we can be able to apply to get the same is that value of the right can also be given by market price per share. We subtract the offer price. We subtract the offer price. Then we divide by number of the rights. Number of the rights. Then we add one like that. So one of the formula on how to get value of the right, it is simply market price per share minus the offer price. We divide by number of the rights, then we add one. Or alternatively, also to compute value for the right. Also to compute value for the right, it will be given by the theoretical X right price. The theoretical X right price, then we subtract the offer price. Then we shall divide by number of the rights. Number of the rights. Like that. So that's now the summary of the three formulas we shall be applying in order to compute the value of the right. In order to compute the value for the right. Then now we can have another paragraph by summarizing that. During the right issue, comma, existing shareholder, during the right issue, comma, the existing shareholder have three options. During the right issue, comma, existing shareholder has three options. Number one will be exercise of the rights. Number one should be exercise of the rights. Exercise of the rights. So under that, we note that it is where during the right issue, comma, the shareholder will buy the right issue shares. It is where during the right issue, comma, the shareholder will buy right issue shares. The right issue shares and keep them. The shareholder will buy the right issue shares and keep them. The shareholder will buy the right issue shares and keep them. Then number two will be sale of the rights. Number 2 will be sale of the rights. Sale of the rights. So for the sale of the rights, we summarize that under this option, comma, during the right issue, under this option, comma, during the right issue, the shareholder will acquire the right issue shares. The shareholder will acquire the right issue shares. The shareholder will acquire the right issue shares and sell them in the open market. Will acquire the right issue shares and sell them in the open market. And sell them in the open market. And sell them in the open market, i.e., through the stock exchange market, i.e., through the stock exchange market, i.e., through the stock exchange market, through the stock exchange market. Number 4 will be ignore the right issue. Number 4 will be that. So number 3 will be ignore the right issue. Ignore the right issue. Ignore the right issue or do nothing, or do nothing. Ignore the right issue or do nothing. So for that, we note that in this case, the shareholder will not participate in the right issue. In this case, the shareholder will not participate in the right issue. The shareholder will not participate in the right issue when it is taking place. The shareholder will not participate in the right issue when it is taking place. The shareholder will not participate in the right issue when it is taking place. When it is taking place. So that is now the summary of what I will have. So I want us now to go through some questions. But before then, we can now conclude by summarizing another paragraph. Another paragraph, we note that when evaluating the 3 options, comma, the investor should consider. When evaluating the 3 options, comma, the investor should consider. The investor should consider Roman letter 1, his percentage of ownership. His percentage of ownership. His percentage of ownership before and after the right issue. His percentage of ownership before and after the right issue. His percentage of ownership before and after the right issue. Then number 2 will be his wallet status. His wallet status before and after the rights issue. His wallet status before and after the right issue. His wallet status before and after the rights issue. His wallet status before and after the rights issue. So that is now the summary of the information we could get from that question. So I want us now to go through your past papers. We do some questions in relation to that. The first question I want us to check, go to the sitting of August 2022. August 2022, question number 2, part C. August 2022, question number 2, part C. We go to August 2022. Question number 2, part C. That question 2, part C, it reads that Horizon Construction Limited wishes to increase number of its branches in the country. It wishes to increase the number of the branches in the country. So the board of directors of the company has decided. The board of directors of the company has decided to finance the expansion program. The expansion program by raising funds from existing shareholders. By raising the funds from the existing shareholders. By raising the funds from the existing shareholders. From the existing shareholders through a 1-for-4 right issue. Through a 1-for-4 right issue. So the question has already given you the number of the rights. The number of the rights are how many? 4. For every 1 share, for every 4 shares that you have, you'll get 1 new share. Remember, the number of the rights indicates the number of the shares in order to acquire 1 new share. The number of the rights, they normally indicate the number of the shares required in order to acquire 1 new share. So the number of the rights are given as 4. Then the published income statement of the company. The published income statement of the company for the year ended 31st December 2021 had the following information. So turnover is given. Profit before interest and tax, then interest, then profit before the tax, then profit, corporate tax, then profit after the tax. So profit after the tax is the same as the net profit. The question also gave you ordinary dividend. They have also given you retained profit for the year, the retained profits for the year. So when you go to the next page, they were able to say that the share capital of the company comprises of 10 million ordinary shares. The share capital of the company comprises of 10 million ordinary shares, which have a bar value of Sh10 per share, per share. The shares of the company are currently being traded on the securities exchange with a price earning ratio of 20 times. So the board of directors have decided to issue the new shares at a 25% discount on the current market price. So now required, Roman letter 1, the theoretical ex-right price of the ordinary share of the company. Roman letter 2, the theoretical value of each right. So I've given the formulas on how to get the value for the right. Then Roman, assuming that an investor held 5,000 ordinary shares of the company before the right issue announcement and 15,000 in his savings account. Calculate the following options and identify the best option to an investor if he exercise all his rights, sell all his rights, ignore the rights issue. So before we answer the question, we do some workings in relation to that. We do some workings. We need to come up with some workings. So among the workings, the question has said that the price earning ratio, the question has given you price earning ratio. Price earning ratio is supposed to be given by market price per share divided by the earning per share. So price earning ratio, it is supposed to be given by market price per share we divide by the earnings per share. So we shall be making the market price per share to be the subject. When you make market price per share to be the subject, it will be given by the price earning ratio. The price earning ratio multiplied by the earnings per share. So when you make the market price per share to be the subject, it will be the price earning ratio multiplied by the earnings per share. Then also to get the earnings per share, earning per share will be equal to earnings available. Earnings available. Earnings available. We divide by number of ordinary shares. So then earnings available is the same as earnings after tax. Earnings available is the same as the earnings after the tax. The earnings available is the same as the earnings after the tax. So when you go to the income statement, are you able to see the profit after the tax? You can see the profit after tax in the income statement. It is 5,950,000. You see that there are 3 zeros at the top. Are you able to see the profit after tax? 5,950,000. There are 3 zeros at the top. There are 3 zeros at the top. Then that's now your earnings available. Earnings available is the same as earnings after the tax. Number of the ordinary shares, you go to the next page, where they say that the share capital of the company comprises of how many million ordinary shares? 10 million ordinary shares. So we divide by 10 million. 10 million ordinary shares. So what should be now our earning per share? What should be the earning per share? It will be 0.595. 0.595. Yeah. So after that, we go back to this part of the formula to get the market price per share. We go back to compute the market price per share. So that market price per share, it is price earning ratio multiplied by the earning per share. So price earning ratio was given in the question. You can see after the number of the ordinary shares, the next paragraph they say that the share of the company are currently being traded on the securities exchange with a price earning ratio of how many times? Yeah, so price earning ratio is 20 times. Then earning per share is 0.595. So that should be able to give us what is supposed to be the market price per share. That should be able to give you what is supposed to be the market price per share. To give us how much? 11.1. Exactly 11.9. Yeah, so that is what will be your market price per share. The other item we need to compute should be the offer price. We need to calculate the offer price. We need now to compute the offer price. We need to compute the offer price. So the offer price, when you continue before required, they said that the board of directors have decided to issue the new shares at what percent? 25% discount on the current market price. So that means the offer price will be 75% of 11.9. A discount is a reduction in the price. They have reduced it by 25%. That means you get 95% of the 11.9. So we get 75% of the 11.9. So what will be our offer price? 8.92. So that is now what was to be used in order to get the two prices. They were not given. Offer price and also the current market price. The other thing I would also like us to know is to get the new shares to be issued. I also want you to know how to get the new shares to be issued. So to compute the new shares to be issued, to calculate the new shares to be issued, new shares to be issued, remember the number of the rights. Number of the rights. Number of the rights was supposed to be given by existing number of the ordinary shares. Existing number of the ordinary shares. Existing number of the ordinary shares. Then we shall divide by number of the rights. Number of, the new shares. Number of the new shares issued. Number of shares. So when you want to calculate the number of the rights, you simply take existing number of the ordinary shares. Existing number of the ordinary shares, then we divide by number of the new shares to be issued. So you want to make the number of the new shares to be issued to be the subject. Number of the new shares. Number of the new shares to be. Number of the new shares to be issued when we make it within the subject. So number of the new shares to be issued. Number of shares issued. When we make it the subject, you simply take the existing shares, divide by number of the rights. Number of so existing number of the shares, we have already used them. So remember the 10 million. Nakumbuka hizi. There were 10 million shares. So you take the 10 million shares, divide by the number of the rights. Number of the rights were given as 4. The number of the rights were given in the equation as 4 rights. Yeah, when you check through the first paragraph, where they say that the board of directors of the company have decided to finance expansion program by raising funds from the existing shareholders through a 1-for-4 right issue. For every 4 shares, you get 1 new share. The 4 are the number of the rights. The 4 are meant to be the number of the rights. So how many shares are meant to be issued? 2.5 million. 2.5 million shares. So this will be 2.5 million And yes. Now, after that, you can answer the question. But just a minute. So those were basically the workings. So from those workings, now we answer the question. From those workings, now answer the question. So the Roman letter 1, we go to the Roman letter 1. Roman letter 1, they were asking you to compute the theoretical ex-right price of the ordinary share of the company. So in the last class, I gave you a formula on how to compute the theoretical ex-right price. So theoretical ex-right price, it is supposed to be given by the current market value, the current market value of equity, current market value of equity, you multiply by the new funds to be raised, new funds to be raised. Then you are to divide by existing number of the ordinary shares. Existing number of the ordinary shares. Existing number of the ordinary, not multiplication, but it was addition. It was not multiplication, it was addition. Here. Yeah. Then we add the number of the new shares to be issued. Number of new shares to be. So to calculate the current market value for equity, I also gave you the formula. You take existing number of the ordinary shares multiplied by the current market price per share. So existing number of the ordinary shares are 10 millions. You remember the 10 millions? Then the current market price per share we calculated. But how much? Current market price per share. 11.9. Then to get the new funds to be raised, you take the number of the new shares to be issued. You remember the number of the new shares to be issued? We got how many shares? So you take the 2.5 million shares multiplied by the offer price. We also calculated the offer price. You remember the offer price? 8.925, like that. Then now we divide again. Existing number of the ordinary shares are 10 millions. The number of the new shares to be issued are 2.5 millions, like that. So when you compute, you now come up with the theoretical ex-right price. That now should give you the theoretical ex-right price. The theoretical ex-right price. The theoretical ex-right price. So be able to come up with the theoretical ex-right price. So you are getting which figure? Anyone who has computed? Sorry. 11 points. 11 points. 30. So confirm. Online, you also confirm the figure you have calculated. Online, confirm the figure you have computed. So what are we coming up with at that level? No one must calculate it. We're getting the same. Yeah, so that is now on how to compute the theoretical X-rate price. So this one, you apply the formula. There is another approach I had shown you. There is another approach I had shown you. No, I'm going to show you. We use the number of the rights. We use the number of the rights. So the number of the rights are 4 shares. So 4 shares multiplied by the current market price, which is 11.9. You take the 4 shares multiplied by the current market price, which is 11.9. So when you take the 4 shares multiplied by 11.9, 47, exactly 47.6. So when you have 4 shares, you get 1 new share. When you have 4 shares, you get 1 new share. The 1 new share, we value it at the offer price. We value it at the offer price. So offer price, you say it was 8.925. So also compute that. It will just remain 8.925. So we add. So this one will give you a total of 5 shares. That one will give you a total of 5 shares. Then when you add 47.6 plus 8.925, it will be able to give you which 56.525. So now our theoretical X-rate price, you simply take 56.525, then divide by 5 by 1. So now to get your theoretical X-rate price, you simply come up with 56.525, then you divide by 5. So confirm whether you are getting the same figure. So those are the two formats which you can use to get the theoretical X right price. So you have gotten the same figure. Yeah, so for that question, you are just to apply this fact. They want to give you 2 marks. Yeah, but the formula I've given you was that. That's why I want to use both to confirm. But for the exam purposes, we have just done it this way. But also before you do it this way, remember you had to look for this price and that price because they were not given. So that was now the order for the Roman letter 1. So we go to the Roman letter 2, the value of the right. We go to the Roman letter 2, where we compute the value for the right. So let us now go to the Roman letter 2. Let's now go to the Roman letter 2. So Roman letter 2, there are 3 formulas I gave you today. The first one is that value of the right. Value of the right is supposed to be given by market price per share minus the theoretical price, right? Price. Value of the right will be equal to market price per share minus the theoretical x right price. Market price per share we calculated, it was 11.9. Exactly 11.9. Then theoretical x right price we have just calculated. The theoretical x right price we have just calculated. It was which year? 11.305. Yeah, so that should be your theoretical x right price, so that you get the value for the right. So it has to be 0.595. So that is just one of the formula of getting the same value of the right. I will give you another formula which you also have it in your books. The value of the rights. Value of the rights, it is supposed to be equal to the market price per share minus the offer price. Minus the offer price. Then we divide by number of the rights. Then we add 1. Market price per share. We subtract the offer price. Then we divide by the number of the rights plus 1. So market price per share it is 11.9. We also computed the offer price. Offer price was 8.9. The number of the rights are 4, then you add 1. So they should be the same. I'm only showing you that the two formulas will give you the same. The two formulas will give you the same. Also, value of the right will be given by the theoretical excellent price minus the offer price. Then we also divide by number of the rights. So theoretical excellent price was 11.305. You subtract 8.925, the number of the rights are 4. So you are just to pick one of the formulas. You are only meant to pick one of the formulas to give you the same value for the right. To give you the same value of the right. To give you the same value of the right. To give you the same value for the right. To give you the same value of the right. So let us now go to the Roman letter 3. So when we go to the Roman letter 3, they were saying that assuming an investor held 5,000 ordinary shares of the company before the right issue announcement, and 15,000 in the shares savings account. Calculate the following option and identify the best option to invest. If he, Roman letter 1, exercise all his rights. Roman letter 2, sell all his rights. Then ignore the right issue. So if you go through the notes, I say there are 2 ways. First, we check percentage of ownership and wallet status before the right issue. Then we also check the same after the right issue. Then we compare them and see how we should value those options. So there are 3 of them: sell of the rights, exercise the rights, and ignore the rights. But before we evaluate which one is the best, first we check the position of the investor before the right issue. Then we shall also check his position after the right issue. So what we need to do some more after is simply to get the total number of the shares for the company. We need to get the total number of the shares of the company after the right issue. Let us first do some workings. So some of the workings, we get the total number of the shares. 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 We want to get the total number of the shares of the company. After the right issue. After the rights issue. Total number of the shares of the company after the rights issue. So after the right issue, you remember that existing number of the shares were 10 million. Remember that? We were given then, we calculated the number of the shares to be issued. Remember the number of the shares to be issued? We got 2.5. So you add them together. That now will give you the total number of the shares of the company after the right issue, which is supposed to be 12.5 million, which is supposed to be 12.5 million, which is supposed to be 12.5 million. So after that, we also get the total number of the shares of the investor after the right issue. Before we answer the question, we also need to get total number of the shares. Total number of the shares of the investor. After the rights issue. After the rights issue. Also need to get total number of the shares of the investor after the rights issue. So we had seen that number of the rights for every 4 shares that you have, you get 1 new share. So the number of the rights was that for every 4 shares that you have, you get 1 new share. That is given in the question. The number of the rights were 4. The number of the rights indicates the number of the shares you will have in order to get 1 new share. So they have given us 4. But this investor had how many shares? When you check down there, assuming the investor held how many shares? He held 5 million shares. 5 million shares. 5 million shares. So held 5,000 shares. So how many new shares do we get from that item? For every 4 shares you have, you get 1 new share. But him, we had 5,000 shares. So total new shares will be 5,000 multiplied by 1 divided by 4. 5,000 multiplied by 1 divided by 4. So you'll be getting how many shares? 1,250. So from there, now the total shares. Now the total shares should be 5,000. Then you have 250. $6,000. So 6,250. So that is one of the workings required. So let us now check the position of the investor for the right issue. We now also check the position of the investor before the rights issue. Now come up with position of the investor before the rights issue. Let us now check before rights issue. Now check what should be there as the position of the investor before the rights issue. So I start with percentage of ownership. Percentage of ownership. We start off with the percentage of ownership. So percentage of ownership, we have seen we own how many shares. Before the right issue, it is 5,000. Yeah, we are looking at before the right issue. So it is 5,000 divided by 10 million. You see the number of the shares before the right issue for the company. there were 10 million shares. There were 10 million. So what is that percentage of ownership? Before the right issue, what was his percentage of ownership? .05%. Who confirmed to honor? Sorry? This 5,000 divided by 10 million, then multiplied by 100. This 0.05%. Yeah. So apart from that, we also want to know the wallet status. We also want to know the wallet status. We also want to know the wallet status. So wallet status, first, we start with the value of the shares. Value of the shares. So currently, he has 5,000 shares. But currently, you value them at the current market price per share. We calculated. That current market price per share was 11.9. Exactly 11.9. So we get that. $59. Then we add the savings. Add the savings. You see, they say there are some savings in the bank. Savings in the bank. This one was given. You see, they say that assuming that he had some savings of how much in the bank account? 15,000. So when you add them together, 74,000. Yes. Yes. Yeah. See, this one we have converted it into shillings. We took the shares multiplied by the market price per share. So that one became shillings. So that should now be his position before the right issue. So let us now check the position after the right issue under each of the options. We want now to check after the right issue for each of the options. After the right issue. Now confirm after the right issue. No. After the right issue. After the right issue. Let us now check after the right issue. After the right issue. And now, after the right issue, we are looking for each option. So the first option, we start with the option 1, is exercise the rights. Option 1 is meant to exercise all rights. So we start with exercise of all the rights. We start off with the exercise of all the rights. So when it comes to the exercise of all the rights, we start out with the percentage of ownership. Percentage of ownership. So we want to know after the right issue, when he exercised all his rights, what is his percentage of ownership? So after the right issue, we calculated the total number of the shares. They came to 63. It was 6,250,000. Yeah. So after the right issue, the shareholder has 6,300,000. So the 200 and was it 250 like that? Yeah. Then also after the right issue, how many total shares were there in the company when we added the 2.5 on the 10 million? It was 12 million Remember that part. Total shares of the company after the right issue. Was it 12.5 million? Yeah, so confirm now that particular percentage of ownership. Compute now that particular percentage of ownership. So it will not change. It will remain the same as before the right issue. Percentage of ownership will not change. It is 0.05%. So that is now the percentage of ownership. The B will now be the wealth. The wealth status. So B should now be the wealth status. When it comes to the wealth status, we start with value of the shares. Value of the shares. So after the right issue, he has 250 shares. After the right issue, he has 6,250 shares. But after the right issue, all shares are valued at the theoretical exit price. After the right issue, all the shares are valued at the theoretical exit price, not the current market price per share. So we had calculated that theoretical exit price. It was 11 point what? It was 11.305. Remember, after the right issue, all the shares are valued at the theoretical exit price. All the shares are valued at the theoretical exit price. Yeah. So how much do we come up with from there? 7. 76. Yeah, so that's now the value for the shares. Then there was that savings in the bank. Savings in the bank remained. That one had not been adjusted. The savings in the bank had not been adjusted. So how much was the amount in the bank? Alikuwa na 15,000. And another thing, now you less the cost of the rights. Less the cost of the rights. Cost of the rights. So we now less the cost for the rights. So cost of the rights, it will be 1,250. Remember, those are the shares he acquired. But now you value them at the offer price. The cost for the right, those shares, you value them at the offer price. We calculated the offer price. How much was the offer price? 7. 8 point. So that figure we shall be subtracting. So when you take 1250 multiplied by 8.925, you are getting which value? $74. 500. So that's now 11,156.25 like that. Yeah. So now get the net worth. So it will not change. It will remain the same as before the right issue. So that net wealth will remain the same as before the right issue. So when you exercise your rights, there will be no changes. Your percentage of ownership and your wealth status will remain as before the right issue. Your percentage of ownership and your wealth status will remain as before the right issue. That's now our Roman letter 3. That's now our Roman number 3. What is the position of the investor when he exercises all his rights? I had explained to you when we mean by exercise of the rights. When you exercise the rights, it means you buy the shares and you keep them. You buy the shares and you keep them. That's now exercise of the rights. So we go to the second option, which is now sale of his rights. We go to option 2, which is meant to be sale of the rights. We now go to option 2, sale of the rights. We now go to option 2. It is supposed to be sale of the rights. We now go to option 2. It is supposed to be sale of the rights. Now go to option 2 as sale of the rights. Now go to option 2 as the sale of the rights. So when it comes to the sale of the rights, so we start with a percentage of ownership. We start off as the percentage of ownership. Start off as the percentage of ownership. So when you sell your rights, remember he acquired 1,250. So those shares he sold them. That's what they mean by sale of the rights. So when he sells those rights, he will be left with the original shares that he had. Unakumbuka the 5,000? Yeah. So he will be left with the 5,000 shares. But when you sell to the existing shareholders. Total shares in the company will remain because you sell to other member of the company, not the outsider. So total shares in the company will still remain. It was 12.1. Total shares of the company after the right issue, they were 12.5. So what the percentage of ownership will reduce. When you sell the rights, the percentage of ownership will reduce. The percentage of ownership is going to reduce. So now it will put what percent? 0.0. Yeah. So you can see it has gone down. When you sell the rights, percentage of ownership will go down. When you sell the rights, the percentage of ownership will go down. So the other item is now to get the wallet status. The other item is now to get the wallet status. So for the wallet status, we start off with the value of the remaining shares. Value of the remaining shares. We start off with the value of the remaining shares. So he is remaining with 5,000 shares, but I said that all the shares are valued at the theoretical ex-right price after the right issue, which was 11.305. 11.305. So you get that. Then you are supposed to add sale of the rights because it is part of your money. You sold them. Yeah. Sale of the rights, which was 1,250 shares. But when he sells, he's still selling them at the theoretical ex-right price. When you sell them, you are still selling them at the theoretical ex-right price. Then also add the savings account. Also add the savings bank account. The savings bank account. So the savings bank account, remember it was how much? 15. Remember the 15,000? And now you less the cost of the rights. Because before you sold them, you had bought them. You also less now the cost. So the rights, they were 12.50. But we had valued them at the offer price. Remember the offer price was 9 or 8? 8.6. So that one you minus. So that now you get the net wealth. So net wealth will not change. It is the same as before the right issue. The net wealth will not change. Will be the same as before the right issue. So it has remained the same. Yes, it will not change. So now we go to option 3, which is the Roman letter 3 of the question. We go to the Roman letter 3, which is Roman letter 5, which is option 3. Now we check option 3. Now we go to option. We now go to option 3. So option 3 are now on. So option 3 is meant to be ignores the right issue. Let me ignore the rights issue. So now we ignore the right issue. So when we ignore the right issue, we shall still start with the percentage of ownership. Percentage of ownership. We start off with the percentage of ownership. So when it comes to the percentage of ownership, when it comes to now to the percentage of ownership, he did not participate in the right issue. So he will still be left with how many shares? 5,000 shares. Because he did not participate in the right issue. Then you have heard about the right issue. Even if you don't buy your shares, because the company must raise the required capital, other shareholders will buy your shares. So total shares in the company after the right issue will still remain 12. Even if you don't buy your shares, other shareholders will buy because the company must raise the required capital. It must raise them. So you will be left with your original shares, but other people have bought your shares. So that now will be the percentage of ownership. So it has gone down 0.04, isn't it? Yeah. Then we now also go to the wallet status. We now go to the wallet status. We now go to the wallet status. So for the wallet status, we start with the value of the shares. Value of the shares. So for the value of the shares, we only have 5,000 shares. But we said after the right issue, all shares are valued at the theoretical exit price. After the right issue, all shares are valued after a value at the theoretical X right price. So that is now the value for the issue. But now we also add the savings because we had some money in the bank. We add the savings in the bank. We add some savings in the bank. So the savings in the bank, it was 15,000. So he did not participate in the right issue. There will be no cost for the rights. Yeah, there will be no cost for the right because he did not participate in the right issue. So that now you get the net worth. So he did not participate in the right issue. There will be no cost for the rights. He did not participate in the right issue, so there will be no cost for the rights. So when you ignore percentage of ownership has gone down, this wallet status has also gone down. I hope you realize that. Yeah. So now the question was asking you to advise. You are meant to calculate the following option and identify the best option to the investor. You need to identify the best option to the investor. So we compare before the right issue and after the right issue for each option. So you can see before the right issue, what was the percentage of ownership? It was 0.05. So when you check under the three options after the right issue, the one for exercise, it remained the same. But this other two, it went down to 0.04%. So that's now for the percentage of ownership. When we are using the percentage of ownership, you have seen that when you exercise the rights, there will be no changes in the percentage of ownership. But when you sell and ignore, it has gone down. Then when you go now to the wallet status, when you check the wallet status, when you exercise, it has remained the same as before. So you see the wallet status did not change. Also, when you sell, it did not change. But when you ignore, it has gone down. So among the three options, which is now the best, exercise, because there will be no changes. But if you ignore both ownership and wallet will go down. If you sell, even though wallet remain the same, percentage of ownership will go down. So now we make a conclusion by summarizing that the best option is to exercise the rights issue. The best option is to exercise the rights issue. The best option is to exercise the right issue since the percentage of ownership, and the wallet status, the percentage of ownership and the wallet status of the investor after the right issue, after the right issue will remain the same as before the right issue. It will remain the same as before the rights issue. Will remain the same as before the right issue. Then another paragraph is that if he sells his rights, comma, the percentage of ownership will decrease. If he sells his rights, comma, percentage of ownership will decrease. Percentage of ownership will decrease. Even though the wallet status will remain the same. Even though the wallet status will remain the same. Even though the wallet status will remain the same. Then another paragraph, we summarize that if he ignores the right issue, both the percentage of ownership, and the wallet status, will decrease. both the percentage of ownership and the wallet status will decrease. So that is now how you are to answer that question. That's now how you are to answer that question. You are to answer that question. Now, when you compete to exercise the rights, it is 3. When you sell, you ako tu pali tumecompute. Maana ile computation tunafanya. Hizo ndio wanakupea hizo marks. But now you're working before. Yeah, that's the comprehensive part of the question. So that in fact it makes you may understand than me just going directly to calculate these ones. If I go to direct them, you may not get the real concept. I must first of all calculate before, then after. But those marks I suspect normally it should be more than 16 marks. For you to do all that should be 16 marks. So that probably when they were marking, this is how could you but that's now the clear concept about, because I will do some other questions. I'll do some other questions on that. So the next question I want us to go through before time catches up with us. We can also refer to another question. So this one, check the one for November 2019, question number 4, part B. November 2019. Question number 4, part B. November 2019. Question number 4, part B. November, not question 4. Sorry. I think that, yeah. Page 34. Question number 4, part B. It starts from page 33. Yeah. So question number 3, part B, November 2019, question number 4, part B. So that question 4, part B for November 2019. They have said that Riverside Limited requires shillings 4.5 millions. It requires shillings 4.5 millions to finance an upcoming project. So the 4.5 millions is the new funds to be raised. Then the firm's existing share capital constitutes of 120,000 ordinary shares, whose current market price per share is how much? That's now the current market price. So the management of the company has proposed to raise funds through the right issue offering at a discount rate of what percent? 25% on the current share price. So that means our offer price will be 75% of the current market price, because they have given you a discount of 25%. So now required, Roman letter 1, number of the ordinary shares to be issued to raise the required capital. Roman letter 2, number of the rights required to subscribe for 1 new ordinary share. Roman letter 3, the theoretical X right, market price per ordinary share. Let us start with the Roman letter 1, how to get the number of the ordinary shares to be issued to raise the required capital. So first, calculate the offer price. We shall first compute the offer price. We shall first compute the offer price. It is now to compute the offer price. So to compute the offer price to calculate the offer price. You can see they gave us a discount of what percent? 25%. So offer price will simply be 75% of the current market price. Are you able to see the current market price? It is how much? 100, which means the offer price will be what? 75 shillings. Then in the notes, I gave you a formula that the new funds will be raised. New funds to be raised. The new funds to be raised. It is supposed to be given by the number of the new shares to be number of the new shares. New shares to be issued. Then we multiply by the offer price. Multiplied by the offer price. So when you want to get the new funds to be raised, it is simply number of the new shares to be issued multiplied by the offer price. So we have already been given the new funds to be raised. We have calculated the offer price. They want you to get the number of the new shares to be issued. You see that from letter 1. Number of the ordinary shares to be issued to raise the required capital. So we make the number of the new shares to be issued to be the subject. So number of the new shares. Number of the new shares to be issued will be given by new funds to be raised. The new funds being raised. Then we divide by the price. Divide by. So we simply take the new funds to be raised. So new funds to be raised was given. That project was requiring 4 point what? So they were requiring 4.5. So offer price we got 70 what? 75 shillings. So that now should be able to give you the number of the shares to be issued to raise the required capital. Because they have already given you the amount. So how many shares should they issue? 60,000. Yeah, so that's now our Roman letter 1. Now we go to the Roman letter 2. Roman letter 2, they wanted you to get the number of the rights required to subscribe one new ordinary share. Number of the rights required to subscribe one new share. So let us see how to get the number of the rights. So number of the rights. Number of the rights is supposed to be given by number of the rights. Remember, it is given by existing number of the ordinary shares. Existing number of the ordinary shares. Then we divide by the new shares to be issued. Divide by new shares to be issued. Divide by new shares to be issued. Existing number of the ordinary shares are given. So now 100 and what? Existing number of the ordinary shares are given. Are you able to see 120,000? The new shares to be issued, we have just calculated there were how many? 60. So we come up with how many rights? So we get 2 rights. So the number of the rights are 2. That should now be your Roman letter 2 of the question. Now we go to the Roman letter 3, the theoretical X right price. Roman letter 3 is the theoretical X right price. So today I shown you two items, the formula and the other format, isn't it? So we shall use the second one that I had shown you in the previous question, how to get the theoretical X right price, because we have the number of the rights. So we have the number of the rights, so we have two rights. So you have gotten the two rights. Yeah, so the number of the rights are 2. So when you have 2 shares, it means you will get 1 new share. When you have 2 shares, you get 1 new share. So we are now on the Roman letter 3, how to get the theoretical X rights. So the 2 shares, we value them at the current market price, which is 100. The 2 shares are the number of the rights. So multiplied by the current market price, which is 100, which is supposed to give us 200. So when you have 2 shares, you are given 1 new share. The number of the rights normally give you an opportunity to acquire 1 new share. So when you have 2 shares, you get 1 new share. So this 1 new share, we value it at the offer price. You are getting 1 new share at the offer price. That offer price was what? 75. So this will also be 75. So when I add, this will give me 3 shares, but this will give me 200 adults. So now our theoretical X right price, simply take 275 divided by 3. So now to calculate our theoretical X right price, we simply get 275 divided by the number of the rights, the total number of plus 1. So, sorry. 91.67. So that should now be your theoretical X right price. So I want you to add there Roman letter 4. It was not required in the question, but add there the Roman letter 4 as the value of the rights. We just include there Roman letter 4 as the value of the rights. Value of the right. So I've given you 3 formulas, but for me, I'll just pick one of them to show you how to get the value for the rights. So the first formula I gave you on how to get the value for the right. Value for the right will be market price per share minus the theoretical X right price. The value for the right will be market price per share minus the theoretical X right price. So are you able to see the market price per share? It was 100. The theoretical X right price will be 91.67. So I would like you to confirm using those other 2 formulas to see whether you get the same. So time is up. We stop there. When we meet, I will do some more other 3 questions because those topics they normally tested almost every sitting. The rights issue, na kuna ile tulianza nayo the risk in capital budgeting. Nakumbuka hiyo ya calculate standard deviation. Those topics they don't miss. The topics I start with are the key ones they test most of frequently. Then after that, we shall now go to the general topics. But first, I will finish all those small topics which are tested frequently. Because if you go to your syllabus, they are towards the end. They are among the last topics, but they test them more frequently. But if I follow the syllabus the way it is, I may leave out those topics, and they are mostly frequently tested. So that now before the end of the term, we should have actually completed the syllabus. So we can stop there for now. When we meet in the next class, today we don't have an alternate. Last time. Yeah, so when we meet now in the next class, I will do some more other questions on that element of the right issue before we finish that topic. So we can stop there for now.